You're welcome to my channel. We are going to be having another example of branch accounts for centrally controlled accounts, but when goods are sent to a branch at a selling price or at an invoice price. So an example when goods are sent at selling price or at invoice price. So here is the example. Naisha Limited has its head office in Kampala City and a branch in Nakawa. It sends goods to the branch at a selling price at a markup of 20%. So whenever they give you a markup or a margin, just know that goods are sent at a selling price. So the following information was given at the end of the year 2023. So we have the stock at 1st January 2023 at selling price, it is 5M. The opening balance for debtors is 1M. Then the goods sent to the branch, 12M. Goods returned by customers, 800,000. Goods returned to head office, 500,000. Cash sales, 5M. Credit sales, 6M. Cash received from debtors, 2M. Bad debts, 400,000. Discount allowed, 200,000. Then the expenses at the branch. We have salaries 800k, electricity 100k, petty cash 100k. The total makes it 1M. Then we have cash stolen of 300k. Then we have stock at 31st December 2023 of 4.5. Required, we are supposed to prepare all the necessary ledger accounts in the books of the head office. Yeah, so when they tell you in the books of the head office, you just know that it is a centrally controlled. Yeah, so they want us to prepare all the necessary ledger accounts. And we said when goods are sent at cost, we usually have 6 ledger accounts. Then when goods are sent at selling price, we add 1 extra, which is called a branch profit adjustment account. So now they become 7 ledger accounts. Yeah, so we start with a branch stock account. The branch stock account, as we looked at the formatting, we start with the opening balance, which is balance brought down. So here, when goods are sent at a selling price, things will be a bit different compared to when goods are sent at cost. So here, this account, we prepare it using the selling price when goods are sent at selling price. So we use the figures for selling price. Then for this one, the branch profit adjustment account, we use the profit, only the profit amount. Then for goods sent to the branch account, we use the cost. So only these 3 accounts change. The rest of the accounts, we use the figures as they were given in the question. But these 3, here we use the selling price, which are the figures that were given in the question. Then for the profit, we shall see how to calculate it. Then also the cost. This one we use cost, this one we use profit, this one we use selling price. That's how we prepare it. So we shall start by balance brought down. Selling price is what was given in the question. The stock 1st January 2023 is 5M. So 5 million. Then we have goods sent to the branch. Goods sent to the branch. We have 12M. Then we have returns from customers, the things that are supposed to be on this side. In case you don't remember, you can look at the formatting of branch accounts for centrally controlled branches. Goods returned by customers is 800k. Yeah, that is it. Then on this side we have cash sales, then also credit sales, then returns to head office. So here the cash sales that we had is 5M, the credit sales is 6M, then goods returned to head office is 500,000. So 5 million, 6 million, goods returned to head office, that. Yeah, in case there was stock stolen or normal loss, we would also put them on the credit side, but they're not here. So another thing that we have is a closing balance, which is 4.5. So the balance carried down like that. Then we see which side is greater, so that we balance. Which side is greater? This is 17M, 17,800. So this side, when we add 5M plus 6M plus 500 plus 4, this side is 16M and this side is 17M, 800,000. So this side is greater. When the debit side is greater, it means that it is a loss. So this minus 16M, what we get is 1.8. So that 1.8 becomes the abnormal loss. Yeah, like that. Then we go to the profit adjustment account. So here we only record the profit figures. We use this same account. Whatever is on this side, on the credit side, we put it on the debit. Whatever is on the debit, we put it on the credit, except things that have to do with sales. The cash sales, the credit sales, and goods returned by customers. Those ones we don't consider them. We consider the rest apart from those three. Yeah, so this side we only have returns to head office, then we have the abnormal loss, then the closing balance. So returns to head office, the closing stock, and the abnormal loss. Then this side we only have the opening balance and then the goods sent. So we have opening stock, then goods sent. And for the figures we are going to record its profit figure. So we said when we are calculating for the profit element, in case we are given markup, we get the goods at selling price times the markup percentage, then out of 100 plus the markup percentage, like how we did here. The selling price was 10M, we did 10M times 25 out of 100 plus 25. 25 was the markup, so that's how we do it. In case it's for margin, how do we calculate for the profit element? So for the margin, you get the selling price times the margin percentage, 20 out of 100, like that. So in this case, we were given a markup. So how are we going to do it? For returns to head office, this was the amount, which is 500,000. So it's going to be 500 times the markup percentage is 20. So times 20 out of 100 plus 20, like that. So it's going to be times 20 out of 100 plus 20, which is 120. So that is the figure, 83,000 recurring. So that will be the figure for here, like that. Then for closing stock, this is the figure, 4.5. So how do we get the profit figure? We get 4.5 M times 20 out of 120, like that. When you're doing it in your exams, don't put these things in brackets, just do it from the side. So times 20 divided by 120, which is 750. Then for abnormal loss, same thing, 1.8 M times 20 out of 120. Times 20 out of 120, which is 300,000. Then this side, closing stock, it is 5. The opening stock is 5M, so 5M times 20 out of 120. So times 20 out of 120. That is the figure. So it is 833 recurring. Then goods sent, it is 12M. So it's going to be 12M times 20 out of 120. So which is 2M. So when you look at it closely, the credit side is greater than the debit side. So it is 2833. So this minus that. So 2833 minus 300,000 for 5 zeros minus 750,000 for 4 zeros minus 8 3 the 4 threes, like that. So it's 1.7. So we have a gross profit of 1.7, like that. So when the credit side is greater than the debit side, it is a profit. If the debit side was greater than the credit, it would be a loss. So that's how we get the profit figure for the branch profit adjustment account. Then for the goods sent to the branch account, we use the cost figures, and in this account we only record two things. This side we record the goods sent to the branch, then this side we write returns to head office. So here we put only the cost figure, so we just get the selling price minus the profit figure. What we get is the cost figure. So for goods sent, this was the selling price, which is 12M minus the profit figure of 2M. So 12M minus 2M, what you get is 10M. So it's what we write here. Then this side returns to head office. Here 500,000 minus this. So 500,000 minus 83 like that. It's 41667. So 416,667. That is it. Then we balance. This account only has two things. So this side is obviously greater, so it is 10M, then 10M. Then this minus that, so stock and the branch will be it's 9M500, 95833, like that. So that is the goods sent of branch account. It is prepared at cost, this one at profit, this one at selling price. Then the rest of the accounts, we use the figures the way they were given in the question. Don't change anything. Yes, so we go to the debtors account. The debtors account, it has a normal debit balance. So our balance brought down, opening balance for debtors was 1 million, so it is 1M. Then this side we have credit sales. Credit sales is 6M. Then on this side we have cash received. From debtors. Cash received from debtors was 2M. Then we have returns by customers. Goods returned by customers, 800,000. Then we have bad debts. Bad debts we have 400,000. Then we have discount allowed. is 200,000. Like that. So you see which side is greater, and this side is greater, 7M and 7M. So this minus this is 2M, this is 1M, then this is 400, so this is 3M 400. So minus 7M, what do you get? 7M minus 3,400. Sorry, 3M 400. We get 3.6. So that becomes the balance carried down of 3.6M. Like that. Then another account that we have is the cash account. The cash account records all the cash transactions of the business, and in this case, on the credit side, we had cash sales and cash received from debtors. In the cash sales, we have 5M. In the cash received from debtors, we have 2M. So this is 2M. Then on the credit side, it's for the things that we're taking out cash. So we have things like cash stolen, we have salaries, electricity. It's more like the expenses. Electricity, then we have petty cash. Cash stolen, 300. Salaries, 800,000. Electricity, 100,000. Petty cash, 100,000. Good. Then you balance. See which side is greater and then balance. So which side is greater? The credit side is greater, which is 7M. So 7M minus, this is 1.3. 1.3, so balance carried down, 7M minus 1.3, it's going to be 5,700,000. That is the cash account. Then the expenses account, we only put on the debit side. So we record all the expenses. We have salaries of 800,000. We have electricity of 100,000. We have petty cash of 100,000. We have cash stolen of 300,000, and then we have bad debts of 400,000, then also discount allowed. Then discount allowed of 200,000. The reason as to why we do not include bad debts and discount allowed in the cash account is because no real cash is actually going out of the business, but they are regarded as expenses, but they're not cash transactions. Yeah, so discount allowed and then bad debt. So we add the total. So this plus this plus this is 1M, then this is 700, then this is 900. So it's 1.9. Then we read this as the balance carried down. Like that. Then we come on the branch profit or loss account. On this side we write a gross profit, then this side we write the expenses. So gross profit, we consider the gross profit that we got from the branch profit adjustment account. This one, it's 1.7. So it is 1.7. Then the branch expenses, this side. Branch expenses we have is 1.9. So this time the expenses are greater than the profit. So we are going to have a branch loss. So 1.9, which is the greater amount. We have a branch loss of 200,000. This minus this gives us 200,000. So that's how we prepare branch accounts when goods are sent to the branch at a selling price. Thanks for watching. Do not forget to subscribe, like, comment, share with your friends. Let's catch up in my next video.